Evening to everyone. Once again, I see you once a year during budget talk. I always mention that I'm very near to Parliament where they are doing now the budget debate. Right, I'm next to Funan building, so I'm very close to Parliament. But that doesn't mean I have insider info. But I always try to go to Funan basement, Yakun, have to have a tea. Hopefully, I bump into some of my colleagues from the Ministry of Finance or IRAS over there because they normally gather over there to get some insider info. But lately, they did not appear over there. Anyway, this year budget, as compared to last year, actually, quite a lot of goodies given to us as individuals. There are a lot of CDC vouchers being dispensed by the government. So many of us will be receiving it. And there's also this SG60 cash payout voucher that's given. Be given later in the year. So I will not cover all these government, where giving to individuals. So today my budget talk is very much focused on business side of the budget, not so much of the individual, whether it's a CDC voucher or the GST voucher or some of the utility subsidies and all that. I will not go do that part of the budget. My focus will be more on the business side of it. Also, I will not be cover some of the very specialized kind of incentive given to certain industry. There were quite a lot of benefits or support given by government to the financial industry, especially. If you are aware, they are going to do a very serious review of the SGX listing and so on. So they're putting a lot of money over there for the financial industry. So those are very specialized industry. I will not cover that, but should you need any help or want to find out more, I can talk to you separately. There are also some marine industry kind of budget incentive. Again, like I say, because it's a very small group of people that are even getting this type of benefit. So I will not take up your time in today's session. So I will cover generally those budgets issue or items that are very specific to general businesses, right? So that then it's more relevant to all of us rather than on the specialized topics. Okay, so basically, if you look at the budget 2025, there are four main areas. The first part is the enterprise support package. This basically focus on the very targeted support of industries. Not so much the tax side of it, but a lot of subsidies or allowances are given to industry to expand overseas, especially. All right. Then the mixed group of budget incentives are given out in more targeted on the workforce. Actually, this year there's not a lot of new workforce related incentive, but rather as an extension or an enhancement of what we have in budget 2024 last year. Right. So in budget 2024, there were a lot of incentive given for the employer or even the employee to upgrade themselves. Right. So there are some enhancement, some extension of the deadline and so on. So a lot of them are very interesting one. I will share with you later. And then we'll cover the corporate income tax. Not very exciting for corporate income tax in terms of the incentive. It's the same like budget 2024, giving us the $40,000 rebates and cash grant for those who are not making profits. And then for personal income tax, small area, so small adjustment here and there. I will also share some, even though not in this current budget 2025, some of the things that was announced in budget 2024, but will have impact in your coming income tax filing, right? So many of you will be filing income tax by April. So there are certain changes that was announced last year in 2024. I just want to refresh or serve as a reminder what are some of the measures that were announced in budget 2024 that will impact you in your coming income tax filing. Okay, so under the enterprise support package, there are basically a few things that was introduced. There are many, like I say, under this enterprise support package, it's not so much of tax incentive, but allowances or even subsidy given to you or in the form of grant to help businesses venture overseas. So we have this market readiness assistance grant, and then we have the double taxation deduction for businesses that go international. And then for those who need support in terms of working capital, the enterprise financing scheme, which are, again, is not new, has been around, but given some enhancement and also some extension. And then we have the merger and acquisition scheme, encouraging businesses to merge and venture overseas, right? So in these few things that the government giving many cash allowances or some tax deduction. Okay, first we have the market readiness assistance grant, quite a generous one. They are giving up to grant, money giving to you, not tax deduction, but money giving to you up to a maximum of 100,000 per new market. So if you venture to 2-3 market, let's say you venture to Malaysia, you venture to Indonesia, Philippines, and Vietnam, and things like each market you get 100,000, right? So quite generous. So it's something that you probably want to look at. How you can take advantage of this market readiness assistance grant to help you venture overseas. But also take note of the timing. This grant will expire next year, March 2026. So you really have to take advantage of it. Don't sit on whatever venture that you have. You may want to move things a bit faster to take advantage of this market readiness assistance grant. Okay, as you can see, what this grant covers are basically three pillars, as I say here. Firstly, for market promotion, there's a cap of 20,000 in terms of the grant, which allow you to conduct marketing, PR campaign to promote your product and services, participating in trade fairs and so on. And an interesting part of it is not just the physical trade fair that you travel to attend, but or conduct or set up your booth and encourage your business to go overseas. Even virtual trade fairs is also given a grant, right? So quite interesting. This is given up to a cap of 20,000. Okay, then next we have the overseas business development. This one, which I think is out of the 3 pillar, the one with the biggest grant, capped at 50,000. Right, this one more on identifying potential overseas partners. That means you venture overseas. Sometimes you may not want to do alone. You may want to look for a business partner in the overseas market, and then you engage consultant, you engage legal professions to help you draft documents and so on to do your acquisition or you do your merger. You can always you can then take advantage of the grant to help you look at your overseas partner and take advantage of this 50,000, right? The last pillar, which is the overseas market setup, this one capped at 30,000. Okay, this one covers in terms of setting up your company overseas. As we all know, when we venture overseas, you have a brand you need to protect, so you need to do intellectual property protection, some legal works that you need to do, so you can get the lawyer to do the documents and get subsidy from the grant. Including if you do trading, there's a trade credit insurance kind of fees that you need to pay. That also comes in handy under this grant of 30,000. All right. As you know, Singapore signed a lot of free trade agreement with a lot of countries, and you may also be seeking help from professionals to help you identify the countries that you're going in and see whether we have signed any free trade agreement, and therefore see whether you can take advantage of the things that are covered in the free trade agreement. Those are things that you engage professional to help, and then you therefore can get a grant of up to 30,000. So I can see this whole package is quite generous. It's per market 100,000, right? Okay, so when you go overseas, the other scheme that you have is what we call a double taxation deduction scheme. This is not new, as you're aware. This double deduction for international scheme, internationalization scheme, it's not new. It has been around, been around. Just that you can see every other year, it's extended, right? So it's supposed to end this year, December 2025, and it's going to be extended for another 5 years up to 2030, right? So you can see the government really helping us to go overseas, to venture overseas. I mean, the hottest topic that we have been talking about last few months is the Johor Special Economic Zone, right? So some of whether the earlier the one that talked about the market readiness grant and this double taxation deduction grant will come in handy and allow you to defray some of your costs in going overseas. So under the double taxation deduction scheme, so what are the things you can deduct twice? That means, let's say you incur expenses going over. Let's say you need to travel, say to Thailand to attend a trade fair, or you are participating at one of the supplier in an overseas trade fair, and then you set up booth. You pay for the booth, you pay rental, traveling expenses, your staff and all that. Some of these expenses can be deducted under the normal tax deduction, but under the double tax deduction, you get another 100% deduction. So you get actually what we call double tax deduction. That means the same expenses you can deduct twice, right? Once under the normal deduction, another one in the form of enhancement. So $1,000 that you incur, you can actually now claim $2,000. Right? So quite a good in terms of incentive going overseas to defray some of your expenses. So I can see here there are many expenses you can deduct for market development, which I mentioned earlier. Earlier, that one is grant, right? Pay you money. This one is tax deduction, right? Also, if you go overseas, study trip mission organized by the whether it's authority or a trade association, these are subject to double tax deduction. You attend overseas trade fair, okay? Even local trade fair, there are approved trade fair by Enterprise Singapore or our tourism board. Even local trade fair may be entitled to it, right? But must be approved by Enterprise Singapore or tourism board. As I mentioned earlier, even virtual trade fair, right? While you don't travel, you may need to pay to attend the trade fair online. Those expenses also can be deducted against your income. Then there are the product service certification. All right, then you have carry out any promotion or advertising campaign, even designing of packages for your overseas market. All these are deductible. All right. So how to enjoy this deduction is make sure when you incur these expenses, let your accountant know. Right, important, right? Because sometimes accountant is not the one that go to attend all these trade show or trade fairs. It's your sales staff or some of your marketing people that go and attend. So you need to feed this information to your accountant so that the accountant know that you have incurred expenses for some of these activities. And then it's also important for the accountant to communicate with your tax agent if you are engaging a tax agent to prepare your tax computation, that you have some of these expenses incurred during the year, so that your tax agent is aware and therefore help you to claim double deduction. So many a times when I review tax computations, I always remind my staff, whenever I see certain marketing expenses, is to follow up with the client to ensure that if they have such expenses, we want to know so that we help you claim double deduction. So we also need your help, that if you are engaging in any of these activities, alert us so that when we prepare your tax return, we will help you claim double deduction. Right? So it's a two-way thing, because sometimes we won't know you incur some of these expenses unless we drill down to your general ledger and item and then go and find out. But sometimes you may not have the luxury to do those line by line review, because if your transaction is thousand and thousand transaction in your GL, we may not be able to pick it up. So it's important that you communicate with us so that we can help you to claim this, right? Okay, so like I mentioned, this is how the double detection works. Basically, if you look at this simple diagram here, showing you expenses that you incur. Like I mentioned, if you incur here 10,000, you can actually claim as 20,000, right? The double tax deduction, right? So the expenses you incur 10,000, but when we do the tax computation, we double it to 20,000. So by doing so, you can now enjoy a tax savings of $1,700, right? It's quite a lot of money, right? Out of $10,000 of overseas expenses that you incur, you can actually get back 1,700, right? So let us know so that we can help you reduce your tax, right? Okay, next is the enhancement to the enterprise financing scheme. This is relating to trade loan, right? This is not new. Again, this was around in budget 2024. So it's just that now they have enhanced it. The original maximum loan, trade loan you can take was 5 million. Now they had up it to 10 million. And this is going to be around for a long time. As you can see, this scheme have been extended again, like the earlier one, to March 2030. It's supposed to end March this year, right? This coming month, but it extended for another 5 years to March 2030. So if you are involved in any trading business and you need financing to support you in your business expansion, this is one loan that you can look at, right? Lately, I also see a lot of merger and acquisition. All right, so M&A activities are quite active, right? Again, you can see here government is encouraging businesses, small businesses, to come together and merge and be bigger. And in order to do so, they are putting in a lot of incentive for businesses to take advantage. First is the M&A allowance. This is quite a generous one if you look at it. What this allowance means is something, a deduction in your tax computation. Is that, let's say you have a deal and you spend 10 million to acquire another company, 10 million to acquire a company, you actually enjoy 25% of the 10 million as tax deduction. Okay, I say again, important thing must say twice. Okay, so if you're acquiring another business for 10 million, you can get a deduction, allowance of 25% of the 10 million. So out of the 10 million that you are investing or you buy over, you get 25%, right? So it's very, very good. That means you get back about 2.5 million in terms of your deduction against your profit. Right? It's an allowance, right? Deduct against your profit over 5 years. So very, very generous, right? So you acquire another business, you get this allowance. On top of that, if you incur any expenses, right? A lot of time when you do merger acquisition, you get lawyers to draft agreement, sales and purchase agreement, look at all the nitty-gritties, or you need to get an you need to do due diligence, right? So in a lot of acquisition, you will do due diligence. So you get the professional accountants to come in to check on the company that you're acquiring. So you incur those costs. You also need to get the tax professional to come in to review your target company, their tax compliance, all these, or you get a valuer to come in to value the business. All these expenses you incur will enjoy, again, similar like just now, double taxation. That means 200%. So you incur $100,000 on professional fee, you can deduct double 200,000. Right. So in our corporate tax rate is 17%. So that means you again, like just now the example, the internationalization scheme, you get a tax saving of $17,000, right? Capped at 100,000, right? So this scheme again, actually not new, it just have been around. Just that there's an enhancement, and we will also be extended to the year 2030, right? So a lot of time for you to look at the suitable target and enjoy some of the benefits that under this scheme, right? So you can see very generous, right? Okay, so next is the Skill Future Enterprise Credit, right? This is not new. This is have been around, I think 2 years or 3 years already. Just to let you know, this scheme is coming to an end in June 2025, right? This year, right? So we are now in March, so you have only 3 more months to quickly go out there, look for any automation solution that you want to acquire to better improve your productivities. These are some of the areas that you can look at. The enterprise development grant that looks at the human resource, marketing, branding, and so on. And the productivity solution grant that you acquire some automation kind of software that help you run your business, and some training courses. So all these are coming to an end soon in 2 months and 3 months time. So take advantage of it. If you need any help, there's an email address at the bottom of this slide. Contact Valerie to help you take advantage of the grant, which is coming to an end very soon. All right, so we have just completed the support for enterprise. Next, we move on to the workforce policies. Basically, these are targeted as individuals. Employers are also given some incentive. Right? For individuals, it's basically the Skill Future Level Up program, Workfare Skill Support. For employers, you get the senior employment credits, progressive wage credit. And then do take note that there's also adjustment for employer. Do take note there will also be adjustment for senior worker CPF contribution rates, right? Okay, for Skill Future Level Up program, this is not new. This is announced in budget 2024, so have been ongoing. What happened here now is there is a enhancement to the Skill Future Level Up program, right? So if you recall, in budget 2024, our government is giving incentive to support individuals that take up full-time diploma courses. They get some support, some allowances, right? Also for those age 40 and above, where they want to do a mid-career switch and want to reskill, move on to another industry, there is also training allowances given. So for the Skill Future Level Up program, they support full-time diploma courses at polytechnics, ITE, and some of the arts institute. This is given to any Singaporean. So the keyword is Singaporean, not PR, not foreign worker. So Singaporean age 40 and above can apply for such grants when they take up full-time diploma training. They get training allowances of 50% of their average income over the last 12 months, capped at 3,000 per month. And you can draw on these allowances for 24 months, right? This is given to any Singaporean 40 and above full-time courses. Okay, so what is the enhancement this year? Basically, earlier the one that I've talked about is for full-time courses. So to cater for some individuals who still want to stay on in their job, but want to upgrade themselves, now they are extending this scheme to part-time training, right? So even part-time training, you can draw on this scheme, right? So they haven't announced what are the selected part-time courses. We will have to wait for a later announcement. But it's something that many of your staff may be looking at, because if they are having a full-time job with you and if they want to upgrade, they can also draw on this scheme, right? Not bad, right? They get, because they are working, right? So the allowance is a bit smaller as compared to the full-time training. Full-time training, you can see that it capped at 3,000, but for this part-time training is 300 per month up to 24 months, right? Okay, so earlier we talked about a training program for part-time training and for those 40 and above. So now there's this new thing called workfare skill support. It's not really new. Sorry, it's not really new. It has been around. It's just that the payout of the allowance was very low, right? As you can see here, $6 per hour, capped at 180 hours, right? Very low, right? So now they are enhancing it up to $300 per month for part-time course. And if you are doing full-time course, 50% of your average salary over 12 months. So very good for those who are embarking on full-time training. And this, like I say, apply to those younger worker, 30 and above. Earlier, the one we talked about, the skill future level up, is 40 and above. Next, we have the progressive wage credit scheme. This is not new. It has been around since 2022. All right. So just to refresh everyone, what happened here is that when you increase your staff salary, you get support from the government. Huh? For those who are, for staff who are currently you're paying 3,000 and below, they all enjoy this subsidy. Sorry, not the staff enjoy. The company will get subsidy from the government, right? What happened, like for example, you increase your staff salary by 100, government will subsidize you $40. Okay, I say again, if you increase your staff salary by $100 at least, government will subsidize you 40. So your actual cost is only 60, even though the staff enjoy $100 salary increase. The employer get back $40, right? So be generous in your increment because the government is supporting you. And this co-funding in the wage increase is for 2 years, right? So not just covering 1 year, but also for 2 years. So you increase 100, because the 100 will incremental, right? If it flow over to the next year. So government will continue to subsidize you for another year. So it's 2 years, 1 plus 1. But it's only for those who are earning 3,000 and below, and up to a maximum salary of 4,000. That means, let's say the staff started at 3,000, you get the subsidies, but the moment you hit above it, up to 4,000, you will not get it already, all right? So what are the conditions to qualify for this grant for the employer, for the company? So company can enjoy this progressive wage credit so long as you have contribute 3 months of CPF for your employees. 3 months. 3 months need not be continuous. I have checked. They say need not be continuous. Because you may have part-timer working for you, right? Some month they work for you, some month they don't work, right? So long as they have work, so long as we have 3 months during the 12 years, during the 12 months, this staff you will get, the company or the employer will get the subsidy, right? Because staff, like I say, can go in and out, part-time staff especially, or freelance worker that support you and you contribute CPF. Okay. This scheme are not applicable to business owner, right? So if you are the shareholder or director or a sole proprietor or partner of the business, you will not get this, right? Yeah, only strictly employees, right? So, like I say, this is not new. It has been around since 2022. So if you look at it in the last year actually, government subsidized 50% of increment for the first tier and 30% in the second tier, and this for 2 years, right? So let's say in 2024, you increase your staff pay by $100. Actually, government subsidize you $50, right? So the actual cost to you is only 50, and this 50% goes on for 2 years, right? So 2024, 2025, you also get it if you increase your staff pay in 2024. So for budget 2025, the government have increased the subsidies for 2025 and 2026. Originally, they planned to give subsidy of 30 and 15% for the 2 years. Now they increase it from 30 to 40 and 15 to 20. So when you are adjusting your staff increment this year and also next year, do take note that the government is helping the business absorb part of the cost, giving you 40% subsidies for 2025 and 20% for 2026. So this is help you to reward your staff, keep your staff, retain your staff by giving them better increment so that they can stay on with you, and then you can invest in them in training and so on. Right? Just for those who are interested to find out how this thing works, basically this is how the thing works. Okay, remember the co-funding level for 2025 is 40%, right? So if you increase $100, so you take 40%, multiply by 100, that will be $40, right? Remember, there are staff that may not work for you for 12 months. They may work 3 months. They may work for 9 months. They also enjoy, I mean, the employer also enjoy the subsidies if they don't have 12 months with you. If they only have 3 months, 6 months, or 9 months, or even 10 months with you, you still can enjoy, the employer can still enjoy this subsidy by multiplying it by the number of months they are with you. So every month, let's say the example I mentioned to you, right, for $100 increment, you get $40 subsidy 1 month. This is 1 month, right? $100 per month increment. 1 month subsidy 40. If they are with you for 9 months, so you take 4 months, $40 times 9 months, you get back 360. So out of $900, 900 times 100 increment, right? That's 9 months times $100 increment is $900 original cost to the employer, right? But now you get back 360 from the government because you get back 40%, right? So I give you one illustration here, right? So you have this staff that comes to enjoy enjoying a salary of 2,000 a month in 2024, and you decide to increase the staff pay by $100 in the year 2025, right? So sorry, I think a mistake here. Let's say you increase it by $200, $200. So you get back 40%, which is $80 per month. So for 1 year, you get back 960. So you look at it, you increase the staff salary $200 times 12 months, the cost to you is $2,004 per year, right? But you get back $9,060 from the government. So your actual cost is only about 1,000 plus only, right? Not the full 2,400 for that year. And this is given to you for 2 years, right? It covers you for 2 years. So whatever increment you pay in 2025 will flow over to 2026, right? So the government continue to subsidize you. So now you look at the right-hand column, 2026. So in 2026, again, you increase another $200 to the staff. So originally staff get 2,000, right? You give him 2,002 in 2025. So in 2026, you give him another $200 increment. So at this moment, your staff by the time in 2026, he will get 2,004. So again, government will cover you. But the only catch here is in 2026, it's no longer 40%, it's a lower amount. All right. So you get less. But again, over the period, you get 1 year plus the 2025, which flow 2 years already, right? So this is the 2 years. One is 2024, one is 2026. Sorry, one is 2025, one is 2026. So there's two subsidy here, right? That adds up to $80 again. So it is quite a good scheme for employer to help you, you know, defray some of your cost, manpower cost when you adjust your staff salary. Help you to, like I say lah, give good increment, keep the staff. Okay, so the other thing I also found out that this progressive wage credit not just apply to existing staff that you have, right? It also apply to new staff that join you, right? They join you, let's say in 2025. So this year, 2025, you recruited a new staff, but this staff have been working elsewhere. Like in this example, this staff could have working in another company, say company A, have been drawing a salary of 2,005 in a year 2024, and this new staff will be joining you in 2025, and so this staff come in, and then therefore you give her a $2,000 starting pay, 2008 starting pay. So compared to her pay before joining in 2005, there's a net increase of $300 for this new staff, right? So the government going to subsidize you, 40% of this $300 in 2025 over 2 years. So what it means to you as employer is when you are recruiting this year, again, be generous. If you want to really, you find a good staff, a new member, you want to bring her into your company and join you, and you're thinking, pay her a bit more so that you can get her to join your company. And do remember, government pay you 40% of whatever higher salary that you're paying her. Right? But remember, only up to $3,000 salary. Above that, no subsidy. So it is for staff that draw 3,000 and below. Right? So that will help you in your hiring policy as to how much you want to offer to a new staff that join you. Because then back in your mind, you must remember you get 40% subsidy, so you can pay a bit more and recruit this staff into your company, right? So beside the progressive wage scheme that government subsidize employers, government also subsidize employer under this senior employment credit. This is to encourage employer to employ the senior worker 60 and above, and for those who are drawing salary 4,000 and below, right? So for this worker, government is supporting you depending on the age band from 2% up to 7%. Maybe a small amount, but I think it's good. Like if you employing a senior worker, there is some form of subsidy. So this 2 or 7% is not based on the increment, right? This one is based on salary. So if the worker you are employing, you are paying them $1,000, you get 2%, which is then $20 per month, right? Per month, right, from the government. So for employing senior worker, right? So they have adjusted the age in 2026 from 65 to 67. They're going to adjust it to 65 to 68, and then the upper limit will be 69 and above. Why the adjustment? Because of the changes in the Employment Act, the retirement age, right? So this is in line with the Employment Act change in the retirement age of workers. So therefore, the senior employment credit also adjusted the age band. So there are also other forms of support from the government. One of them is the uplifting employment credits. If you employ local, again, the stress of the word, local ex-offender, you get a subsidy of 20% of the salary paid, up to 9 months, with a cap of 600 per month. Right, again, 4,000 below. Scheme has been around, not new, expanded to 2028. Okay, on top of just a local offender, they also have a scheme for the local employee with disability. The age is from 13 and above. Very similar, 20% subsidy and so on. Okay, while we talk about subsidy earlier, do take note that the CPF rate for senior worker be adjusted, and government also giving you a subsidy in terms of the CPF adjustment, 0.25%. Not a lot, but helpful in for employer to defray some of the changes in the senior worker CPF contribution in 2025 and also 2026. So what you're saying now, 2025 adjustment, which you are paying now, going forward next year, there is another round of adjustment, right? Similarly, for 55 to 65, there will be CPF support, transition offset support, but not for 65 and above. The objective of the government is to restore the CPF contribution of senior worker back to the 55. That means for 37%. Currently, you see the 55 to 60 total contribution is 34, right? Employer-employee. So the objective of the government is to move this 34 to 37% in the coming years. I think they want to achieve it by 2030. So you can see every year they're going to adjust this from now right up to 2030 to move the contribution rate back on par with workers that are 55 and lower. That is the 37%, right? So in your budgeting, you may need to take into account some of these CPF adjustment. Okay, so much for the workforce. Okay, so now we move on to the corporate tax, right? Corporate tax, nothing changed. I won't say nothing changed. Actually, in the past, we don't really have so much tax rebate. Only last year, budget 2024, and this year, similar rebates and also cash grant. Right? Cash grant of 2,000, mainly given to those who are not making profit, therefore not paying tax and not enjoy the tax rebate. They will be given $2,000 cash grant. That means since a company don't pay tax, losses, so government give them cash 2,000. So for them to qualify for the 2,000, they must have at least made CPF contribution to one local employee in 2024. Right? If the employee is the shareholder or director of the company, won't count. Right? It must be not a shareholder, not a director of the company. Okay, the tax rebate remains, like I mentioned, 50% or 40, whichever is the higher. All right, so you don't note that there are some calculation involved because of the cash grant of $2,000. So don't worry, we will help you sort this out, whether you get the cash grant of 2,000 or you get the rebates of 50%, right? But if you're loss making, then you get 2,000. But you are profitable, then you don't get the 2,000, you get the rebates instead. So how it works out, this is the example. All right, so in this case, you make a profit, so you are subject to tax. So your tax is 30,000, supposed to pay 30,000, but because of the 50% tax rebate, you get a rebate of 15,000, and because you get a $2,000 grant, or in this case, because you are not, like I mentioned, you are not loss making, so you get a full $15,000. and the net is 50% of your tax payable, which is $15,000. Okay, so for those with very minimal tax payable, like in this example, you only have 3,000, half of it is 1,500, but the cash grant is, remember, 2,000. So you actually get some money back from the government because of your cash grant, right? Okay, for those who are looking at maximizing the $40,000 cash grant, is if you make at least $573,000 of chargeable income, then you will enjoy the full $40,000 tax rebates under this scheme, right? So it's very generous. Okay, so like I say, corporate tax, not a lot of changes from last year. Just same, no change. On the personal tax side, still the $200 rebate. Okay, you notice the last year the rebate is pegged to 50% or 200, whichever the higher. All right. So this year, sorry, whichever is the lower. So this year, they up it to 60%, but the $200 remains, no change. All right. So that's how it works. So for those who are paying higher tax, no change. They only get $200, right? Okay, so what I want to highlight here is going from here onwards, is not so much of the budget 2025, but what impact you in your coming income tax filing for YA 2025. So most of us will be filing income tax soon. All right. So to take note for working mothers, right? Do take note that the working mother child relief have a very significant change. Right? Under the old scheme, your relief is pegged to your earned income. Earned income means the employment income, trade income. But if you collect rental, dividend income, rental income, interest income, then you don't get this working mother child relief, right? Remember that, huh? But you must be working. That means you earn income. That means your employment, your trade income, things like that, or vocation. Then you get this working mother child relief. And in the past, you get 15% for first child, second child 20%, third child 25%. For child born on or before 1st January 2024. For your child that are born after 1st January 2024, you no longer enjoy the percentage. You get a fixed sum. That means on top of the, okay, remember we have a qualifying child relief, right? The 4,000 or whatever, right? So on top of that, for mother, working mother, you get 8,000 for first child, second child 10,000, third child 12,000. So it's a lot less, depending on where your income level, right? May be good for those low income, because now you get a fixed sum. But for those high income earner, mothers that are earning high income, you'll find that you may lose out under this new fixed sum amount. Okay, so I give an example here. Mother working, have an earned income of 100,000 a year. And because of this change, you can see that for the third child, instead of getting 25% out of 100,000, now she only get a fixed sum of 12,000. So there's a half, right, loss. But this only apply for the child born on or after 1st January 2024. The older child that are born before this day, no change. You still enjoy the 15, 20%, 25%. Only child born after that. All right, so very strange. Government encourage people to give more babies, but at the same time, they are less. They are reducing, right? The relief for working mother child relief, right? Also, do take note of this dependent or caregiver income threshold. Used to be 4,000. Now they increase it to 8,000. Effective this coming year in YA 2025. So this apply to those who are looking after I don't know father, mother, the kind of stuff, right? That need support, right? So you get more now. The threshold now have moved up to 8,000, right? But even some may find that it's still low, 8,000 a year, right? Okay, next. This is the last year you can claim your, or no more already. Sorry, lapse YA 2024. So for those who have been claiming the foreign domestic worker levy twice, right? They allow you to, there's a double deduction on this side. This one will be gone. So this year you can't claim anymore, right? It's gone. Oh. All right, so to take note. But anyway, this one is auto-populated in most of the case. If you log in online to do your Form B filing, you'll find that this amount is auto-populated. All right. But do take note, if you go in this year, you don't see it, it's because this thing has lapsed, no longer applicable anymore. Don't go and call IRAS, why this one no longer there? It's because no longer available. It has lapsed. Government not extending this relief. Similarly, for the people who are attending courses, we used to be able to deduct course fee from our, as a form of relief, up to 5,500. So if you are taking some courses, you can deduct. Again, this one will be discontinued from YA 2026. So this year, YA 2025 is the last time you can claim. Okay, one of the reasons given is that because now government are giving a lot of subsidies. If you do remember, all of us have the skill future credits. All right, the initial $1,000, then subsequent give us another 4,000. So with all these credits, now they're taking away the cost fee relief. But I think not many people are claiming this lah. Even for myself, I don't claim, right? Because anytime you claim anything, you need to keep evidence. And sometimes you attend short courses and all that, you don't bother to claim because you need to keep records. Okay, the other significant thing that they remove is the CPF top-up. And many of us top up our CPF retirement account and so on. To take note, this thing will be discontinued from YA 2026. All right. This is the reason giving is because government now is matching, right, some of the grants, and therefore this relief will also be taken away. Right? But the normal CPF top up to your ordinary account still ongoing. This is more for the retirement savings scheme thing. So not all of us are affected, right? So take note. This is only taking away for the match retirement savings scheme. The top up to ordinary account still ongoing. Similarly, topping up the Medisave account will be gone, right? But this one will be gone 1 more year later, YA 2026. So again, just now the one is topping up retirement account. This one topping up Medisave. Topping up ordinary account still applicable to you. $8,000 to make use of it. And the $8,000 not just topping your own account, you top up your spouse account, you also get 8,000. So it become 8,000 plus 8,000, 16,000 relief. If you top up your parent one also have a parent 8,000 also. But parent again cannot top up retirement or Medisave they're taking it away, right? So take advantage of this CPF top up. Instead of sometimes giving allowances to your parents, you can top up their CPF account. Because if the parents are 55 and above, they can actually draw money from their, I mean, if they already satisfied the full retirement sum, then whatever money that sits in the ordinary account, they can actually take out, right? So instead of paying them monthly allowance, why don't you top up their ordinary account? And then they can draw from the ordinary account, right? And then you enjoy the $8,000 CPF top up. So two conditions, your parent must be 55 and above, because they can then draw from CPF account, and they must satisfy the full retirement sum. Because if they don't satisfy full retirement sum, every dollar you put in, they go to retirement account, right? So it's good that, you know, they satisfy the full retirement sum and they're 55 and above. So you can take advantage of some of these relief scheme, right? So, but also remember, now the full relief that you can claim, all the relief, whether it's earned income relief, parent relief, CPF relief, whatever relief, all add up, cannot be more than 80,000. Anything more than 80,000, so overall, all the relief, you cannot claim more than 80,000. So there's a cap lah. So for women used to have the working mother child relief, very generous, right? I do encounter some of them in the past claim 100 over 1,000 working mother child relief, but that have been capped. All the relief capped at 80,000. Right, so there's a max you can claim. Okay, so I have come to the end of the talk on budget 2025. Just to recap, there are schemes that helping you to go overseas. Very generous one, right? The market readiness grant, and then we have the double taxation for internationalization, and then we have also those skill future leveling up for individuals. And for employers, remember we have the progressive wage credit that supports you when you do increment for your staff. Like I say, I also found out, you know, even new staff that joins you, so long as they work 3 months in the previous year, you also get the progressive wage credit for employers subsidy. So it's very good. You want to keep staff, retain staff, you want to attract staff, you can be a bit more generous in your increment because the government supporting 40% for 2 years. Right, for corporate, we have the corporate tax rebate, 40,000 or 50%, whichever, lower. And then personal tax, $200 rebates. And remember, some of the reliefs are going to be so-called expired. So the foreign workers, foreign domestic levy relief will be gone. Cost fee will be gone. Right? CPF top up for retirement and savings are gone. Right. So I have come to the end. Any question from anyone who needs some clarification on some of the things that I have mentioned?